Hi, this is Kerry Artek with Wicked Stocks bringing you the weekly IWM report. That is the Russell 2000 ETF for the week of Monday, January 24th, 2022. Before we look at the charts, I want to encourage you to please click like each and every time you watch the weekly IWM report or any content that Wicked Stocks uploads to its YouTube channel. It helps us out a great deal with whether or not we're found through search engine results on YouTube. And secondly, subscribe. If you haven't subscribed already, you should, in my opinion, because you'll be notified each and every time new content has been uploaded, especially with the weekly videos, the weekly DIA, IWM, and Bitcoin. Seeing them on a Sunday evening before the opening bell on Monday, I think is important. To watch it on Wednesday or Thursday by happenstance because you haven't been notified, well, it's a little late in terms of relevance and usability. So there's that. So subscribe. Anyway, here is the IWM. This is all weekly bar chart, and we obviously not last week, but the week before, closed below the 216.81 channel bottom, and I was indicating likely bearish continuation into the 190s within a matter of weeks, and that has obviously been playing out. We can take a look at the big picture. You know, this is a weekly chart that goes back some 12, 13, 14 years, and the target has been 192.36, and we are close to that right now. We settled 196.99. We could actually test that on Monday. This is a significant support level on the weekly chart, can contain selling into later year. But I do need to backstep just a little bit because of the fact that, number one, I think the triple Q has more downside. Number two, the SPY as of Friday's close seems to be setting up for a meaningful sell signal that could play out well into February trade. That jury is still out, by the way. If you watch the daily SPY from Monday, you'll see that we didn't settle below long-term support by a 1% margin, but it was very close. And so, obviously, you need to give this a little breathing room. Do you want to buy aggressively at 192.36? I think you can buy 192.36, but you just need to know after doing more thorough examination at the fact, first of all, that we spend about a year in a consolidation framework way up at these highs, roughly between, and these are the extreme points, 207.21 was the first big low once we pushed into this area, and 244.46 was the actual high. So I'm going to call that kind of the extreme range over the course of a full year. And when you've been locked in a consolidation framework, as the IWM had for a very prolonged period of time, a very well-defined consolidation at the high end of a move, when you break below that consolidation, you oftentimes, I was going to say usually, there is no usually generally in technical analysis, but you oftentimes reduplicate the range to the downside. In other words, the distance between 207.21 and 244.46, when you break 207.21, the next target under many circumstances would be 169.96, which is just simple math, subtracting the top two numbers out from each other and then subtracting that difference from 207.21 takes you down to a full, I call it the full channel extension. This is not really a channel, but the full range extension, 169.96. And there's a lot going on down there. One of the reasons I'm sort of pushing this as a possible target is because it also coincides roughly with the 173.39 high from August of 2018. And as it turns out, the 50% downside retracement from the what I call the COVID low, March of 2020, against the most recent high a couple of months ago is 170.08. So between 169.96 and 173.39, there's just a significant zone of support that, if tested, can absorb selling, I think, through 2022 and quite possibly through the balance of the decade as we look back on this. But you could sort of play this if you're short the market right now from a couple of weeks ago when we have the sell signal below 216.81. You could cover at that 192.36 long-term channel top. That's a possibility. Whether you go long there or not, you could wait it out. You could buy on strength. You could go long at 192.36. I mean, there's more than one way to skin a cat, and I don't like to get deeply involved in how you trade because everybody is a little different in terms of their trading style, whether they're investing, whether they're day trading. It really runs the gamut. So I'm just putting the numbers out there for you. We could get a really nice bounce at 192.36 this week. We may actually put a low out there for the year, but closing below 192.36, even on a Monday, even if we close below 192.36 on Monday this week, we could perhaps by the end of the week fall into the 170s. I think personally that this could take several weeks to play out, 3 to 5 weeks to play out. If we continue placing weekly settlements below 207.21, for instance, that 169.96, I think is a realistic 3 to 5 week move. And that, once again, that area, upper 160s, low 170s, solid zone of support to buy into on a long-term basis. As is 192.36. So this is what you get sometimes. You got to pick your point. And anyway, let's talk upside here. We still have, of course, the 216.81 level that can contain buying really through February, and below which expecting at least that 192.36 level, and as I mentioned a moment ago, possibly all the way in to the very low 170s. Now, if we push through and close the week above 216.81, which I think is a long shot for this week, we still have to contend with a descending channel top, a new one based on last week's low at 220.46. So I like this area in terms of its definition. It sort of defines our ceiling and also our buy signal as we continue into later Q1. So if this market rallies significantly this week, this 216.81 to 220.46 area can contain buying possibly through February. And from there, we could fall back aggressively into later February. It is the settlement above 220.46, dropping at a pretty decent rate as we continue into late January, early February. That is the buy signal, really. I think through the rest of Q1, closing above 220.46, we're probably 3 to 5 weeks away with this kind of volatility of reaching 241.99, which is our next significant resistance area that, if tested over the next couple of months, can contain monthly buying pressures, and if settled above, would indicate a good low for the year, with bullish continuation then expected into later year. But we're a long way from that right now. Bottom line, we still remain heavy below the 207, 207.21 up to 216.81 area. That's through February, anticipating a test this week of that 192.36 channel top. But as I mentioned, I think that this market may continue all the way south into the upper 160s, low 170s over the next 3 to 5 weeks, where it can place a very long-term low. And I'm just going to leave it at that. Please click like if you like what you've seen here in the weekly IWM report, and subscribe to the Wicked Stocks YouTube channel. I'll be back next week for another weekly edition of the weekly IWM report. You have a great week, and we'll talk soon.